What if Tesla's next earnings report becomes the turning point? Could the stock soar to new highs or crash sharply after a hot rally? With Tesla set to release third quarter 2025 numbers on October 22nd, can it meet expectations? Or is the risk already built in? Wherever you are in the world, if you're tracking stocks, innovation, or Silicon Valley's future, hit subscribe and let's dive in. Tesla's stock has rallied dramatically this year, but that very strength raises the question, have investors already priced in the best case? Third quarter is critical. Tesla is expected to report after market close on October 22nd. Delivery numbers are strong. Tesla announced deliveries of 497,099 vehicles in the third quarter, beating many forecasts. But beneath the surface, Europe demand is lagging, and the United States electric vehicle tax credit has expired, both headwinds. So the question is, will Tesla build on this momentum, or will the upcoming earnings expose cracks? Let's start with the positives. Record delivery numbers show demand remains in the engine. Emerging growth areas such as energy storage and robotics give Tesla a future growth narrative. Some analysts believe Tesla is more than a car maker. It's a tech platform with artificial intelligence, autonomy, and vertical integration. If Tesla delivers strong margins, reveals progress on its robotaxi or autopilot roadmap, or unveils new model updates, the stock could surge. Imagine Tesla beating profit estimates and reaffirming long-term growth. That could ignite the next leg of the rally. But the flip side is serious. Tesla's valuation is high. A price-to-earnings ratio near 250 implies years of near-perfect growth. That raises the bar high. Even strong delivery numbers may not satisfy Wall Street if margins compress or guidance disappoints. Europe remains weak, competition intensifies, and the expiry of the tax credit may pull forward demand rather than sustain it. Some analysts warn of a 30% correction scenario if Tesla stumbles. So the existential question, has Tesla already priced in perfection? And if so, what happens when reality doesn't match? So, let's look at consensus numbers. Forecasts suggest earnings per share of around 52 to 55 cents for the third quarter, with revenues close to $26 billion. Given the strong deliveries, a beat is definitely possible, especially if margins or energy storage revenue surprise to the upside. But remember, big beats may already be expected. So, the market could be looking for more than just a beat. It might actually demand strong forward guidance and clarity on growth levers. If Tesla meets the numbers but pulls guidance or signals margin pressure, well, that could trigger a sell-off. Here are two scenarios for Tesla stock. In the bull scenario, Tesla posts strong results, margins improve, and robotaxi or AI updates really excite investors. In that case, the stock could head toward a $520 target, which would imply about 20% upside. On the other hand, in the bear scenario, Tesla meets the numbers, but guidance disappoints and margins just kind of stagnate. That could mean the stock corrects toward $300, which is roughly a 30% downside. Which scenario actually plays out depends on a few key variables: margin trends, model updates, robotaxi progress, and international demand. As investors, here's what you should focus on. Automotive gross margins. Have those price cuts hurt profitability? Energy and storage business. You'll want to look at deployment numbers and margin trends there as well. Robotaxi, autonomy, and AI initiatives. Are they still on track? And don't forget about regional demand, especially in Europe and China. Guidance is really critical. Even a good quarter can actually disappoint if forward expectations are lowered. If you own TSLA, this earnings event is pivotal. You need to decide your risk tolerance. Are you a long-term believer in the story, or do you want to hedge near-term risk? For traders, a big move is likely, historically, One-day moves are about 9 to 10% around earnings. For those thinking long-term, the broader Tesla story does remain compelling. But knowing when to act is just as important as the narrative. So ask yourself, am I buying the vision or betting on perfection? So, what's your view? Will Tesla stock soar after Q3? Or is it poised for a correction? Let me know in the comments below. And if you found this video useful, hit subscribe and turn on the bell for more deep dives on Tesla, AI, and tomorrow's tech stocks. Thanks for watching, and see you next time.